Hey everyone, I hope you are doing fantastic today. Really do. We're going to get out to the charts as quickly as possible, most especially right now watching the 5909 quarter there on the downside to see if we're going to get any follow through. We'll talk about that in a moment. Before we do anything, we need to make sure that we are all expressly aware that this is for educational purposes only. Trading contains substantial amounts of risk, not suitable for everyone, folks. I myself am not a licensed professional. None of the presenters are, and we want to keep everything in the presentation hypothetical. Okay, so let's do this. Let's go ahead and get out to the charts. Very good. All right, let me see here. Just want to make sure. Oh, you know what? Hang in there for just 1 second. Yeah, I'm going to have to get my... We're out at the charts, but... I was trying to think. I want to get the video up and running. Hang in there for just a second, folks. I'll try to get that. Let me just get that done. $10:02. That's okay. All right. So what I'm going to do is end that. Be able to do that, and that way I will scare you all with my face here in just a moment. Yep, that's okay. We'll go ahead and I'm going to have to end that. Okay. Try this again. Should be good there. Okay, very good.
Will.
All right. Hey, all right, good deal. Zach is on here. So, okay, folks, time to get started. You should be seeing my charts here. I think it's going to be a pretty fun day. I don't know if any of you were there yesterday during the event we did with Shark Indicators. We appreciate those guys as always. So we have the infamous Zach here with us today. He's going to be. So yesterday we gave him, or the Shark guys gave him a nickname, the King of Fun. Right? They were getting to have all the fun yesterday. I said, oh, I was so jealous. I decided I had to have a little bit of fun myself. Right? So get out on the live charts. I had to do the PowerPoint yesterday. Yeah, so all joking aside, folks, Zach's here. He's going to, or he was, let me make sure. Yeah, he's here. Okay, good deal. So Zach's with us, and what we're going to do today, I already have you out on the charts. We're going to have a little bit of fun first. And we're going to look through some things, kind of get an understanding of what in the world we're going to be looking at, talking about today. And then Zach, we appreciate everything that he's going to do. He's going to pop in, and we'll get him to screen share a little bit, and we'll walk through some automation. We did discuss a bit of that yesterday, so it was pertaining to what we can accomplish with the InvestSuite. So I'm so passionate about this. I use it exclusively and decided to release it publicly recently. But the point being is that the goal here is to educate, if you will, and learn that we can take investing to the next level, right? At the end of the day, we want to have Wall Street analytics on our chart. I mean, I'm not in a literal sense or anything like that, but you don't need much, right? Trading, we talked about this morning in our live session, trading, going back to the basics is everything. So for those of you, which pretty much the majority of you, if not all, but so you were all in the live room this morning, and what did we talk about? I don't want to be the buyer, right? So yesterday, if you were in our live stream or whatnot, or if you reviewed that recording, etc., You saw that we did. We absolutely bought the market yesterday. We had that trade set up. So we came in here, but we were explaining yesterday how it was a very different picture, right? So we bought the market right in through here looking for 59.02s 3/4. We went on further to say, and I'm just going to do a quick recap because we did this morning, as always. But in such, we said, okay, look, this is where our target is, but at the end of all of this, I don't want to get ahead of myself. I don't want to put the cart before the horse, and we're not in any way saying that the sellers are going to come flooding in. Remember, I'm recapping yesterday. So we're in no way saying that the sellers are going to flood in, right, and just drop the market or whatnot, but it is reaching a point where I want to back off. Why? Well, because I believe that the larger money in the market is doing the same thing. So as always, I'm trying to follow what they're doing because they're the movers of the market. I am clearly not. Even collectively, most of us are not. And so it takes a big crowd, as we know. We've seen the forum discussions and everything. So we've seen the power of retail traders today, and they are no joke. Meme stocks, derivative of such, So it's very cool what they've been able to accomplish. But I just wanted to point that out, a little quick recap there. We said this morning I didn't want to be the buyer right out of the gate, okay? We had this supply come in. We call this a VTCS. And so retracement into such is a very nice setup. We're declining. We wanted to get the gap closure. As you all heard me say 50 times this morning probably, I understand that price can go higher, and that's okay because I'm going to let it go if it does, and I'll accept defeat. Not even defeat, I'll just accept not doing anything because that's what my methodology was telling me to do, nothing. However, I anticipated that we would come down and get this gap closure. We now have, so that was 5,900 3/4. We've since gotten that. And now what we're doing, folks, is we're just bouncing off of that. So that's very, let's call it micro. Like I'm thinking really fast right now, short term today, what's likely to happen in the next, hour or something like that. So very micro. Day trading, right? You got to think micro from a day trading standpoint. So we'll look at this. I will circle back to it. I will do analysis. We'll have fun with all of that as well, and kind of the hows and the whys. But we're going to take this to a different level, right? Remember, because we're all, in my opinion, there's a lot of excitement when it comes to day trading. Even the word is like day trading. It just sounds good. But I think we lose sight of the bigger picture. And I said this, I think, yesterday a little bit, but if I went back, if we all had the machine, right, give AI a little while, you never know. But all joking aside, if I could go back to the beginning of when I started this, so a couple decades ago, and I knew what I know now, again, we all do this, but if I could go back and do that, I would be so focused on the bigger picture because I could get from point A to point B, meaning from then to now, and keep things so very simple. Of course, I would have fun with day trading or swing trading even and things like that. But the bigger picture, in a hypothetical sense, because I don't want to talk about money and all that stuff, but generally speaking, investing is wealth building, right? That's what it's all about. The ability, or lack thereof, to build wealth. And trading is a different thing. So we want to talk about trading. We do this every day, but we don't want to forget about investing. Investing, we can apply portfolios, all of the above, and we're going to see the tool that, like I said, I use exclusively, and we'll kind of get into that. All right, so right now, as far as analysis goes, I'm sitting tight. I just told you as we arrived into the session today, I said I want to watch. I told you a specific number, 59.09 quarter is what I said. I prefaced all of this morning with, hey, I'm just being patient. I even, I'll just do this further recap real fast. I drew it in like this, okay? And I put this in as a range this morning because that's what I anticipated was going to, hold the market up and down. And I said, I don't know which way it's going to break out of it, right? Ultimately, I never predict that. I let it happen, though. So the fluctuation, the volatility within this range makes perfectly good sense. This is exactly what we would expect. However, I do believe that today it will break out of this range. At such point, we will likely have a magnetic effect and it'll pull price back to the range. And so kind of staying focused on that. But again, watching 59.09 quarter, I would be looking for 58.96 half on the downside. All right. Yep. So that would come in something looking a little bit like this. I say 09 quarter. This is that number that I mentioned before, we got started here. Okay, so if I were trading this, I'd be looking for 58.96 half. Oops, sorry about that. Let me drag that down right there. Okay. All right. Yep. So there we go. I'm going to hold off on this. I'm going to be a little bit more patient. Patience is a virtue and all that. So we'll see how that goes. But let me remind you of what I said yesterday before I get started with the InvestSuite, okay? One thing I want to bring your attention to, again, this is all, as always, done far in advance. I want to go over here. So if we look at the NASDAQ, this is the level that I discussed yesterday in the room. I put the volume profile on there, showed you, with specificity. So this area right here, I believe, is leftover supply. Now, this is crossed a rollover, a futures contract rollover. So factually speaking, there cannot be residing orders there. They would have been canceled by the exchange. But the way that things work in the market, the institutions, things like that, they're looking to buy low and sell high. So they're looking for levels here, and I believe they're probably going to step in slightly. Okay, I'm not saying that the market's going to turn back down from here. I hope it doesn't. I have a vested interest in the upside, but I'm anticipating that we're at least going to run into a bit of a brick wall here, as you can clearly see we already have. So the sellers are starting to go, hold on, have we gone too far? Let's fight this out a little bit. And, hopefully we'll see the buyers prevail. But when we're in this situation, it's just too aggressive. There's no requirement, if you will, for me to get involved in it. And therefore, like this morning, okay, I said I'm not going to buy the market. Why? Because it's telling me not to. And ultimately, it's doing the same thing right here. Okay, so this is, again, the NASDAQ. We even took it down. We looked at it some smaller time frame levels too. But just pay attention to this one. I'll repeat the number as I did, all this week. So 21,149, 21,453 quarters, just some rejection maybe. At minimum, I anticipate a lack of buying. Okay, so I'm not saying it's going to turn down. I just anticipate that we're getting some rejection from here. Okay, all right. So hopefully that makes sense. And we'll circle back to this. I'll answer any questions. I don't want to take too long on this because we want to get directly to the InvestSuite and get Zach rocking and rolling, having his fun again today. And then I will stick around as long as you all like. I know that Zach's very accommodating. I can't say thank you enough. He's very accommodating, and he will, support you all if you have questions pertaining to. We're going to be talking about BloodHound, Blackbird, collectively, PFAInvestSuite, BloodHound, Blackbird. Put them together, we end up with an entire solution capable of automation, right? So I'll let Zach have the fun with that, but ultimately he, using their tools, can take the InvestSuite and automate the process and actually populate back test results, the whole 9 yards, okay? So it's pretty cool. But let me give you some excitement. Let me just go ahead. Here we're going to get started. I'm an S&P trader. You probably heard on the songs coming in, right? I don't know. But I'm an S&P trader. I love it. And it's what I just trade it almost exclusively. I do trade other things, or more so invest predominantly, but I focus as far as trading mostly on the S&P. So I'm going to stay here. I'll be happy to look at any market. You can see we have several down that we look at periodically. Anyone you want to look at, we'll do so. So on the S&P, let's run through, number one, what is the InvestSuite? So I'm not going to, again, yesterday I did this whole spiel, PowerPoint presentation, the 9 yards. I'm not going to do that today. As I told you, Zach got to have all the fun yesterday. I'm joking. He's awesome. And hopefully he had fun. I mean, did you have fun, Zach?
Yeah, of course.
Right.
This is my life.
There he is. There it is. I figure I better let him speak for himself, right, folks?
Yeah, I found out. I was talking earlier, but I found out. I guess Huddle changed my microphone, so I got that sorted out there. So
Oh, nice. Now you're coming through really, really clear as well, so you
okay.
sound good.
Yeah, I was going to make sure that I'm not my microphone's not too loud.
No, it sounds excellent on my end, as a matter of fact.
Good.
So
Good
if
deal.
anyone's having troubles, just let us know or whatnot. But I mean, no, everything sounds really good, man.
Yeah.
Look at that handsome fellow there. Oh my goodness. All right, everyone. So with the InvestSuite, if you had time, yesterday we went and we did the event. Zach and I did the event. If you want to go through the basics, and look, as I said, I joke about the boredom or what. It wasn't really boring when I did the PowerPoint, I hope. But if you want those very basics, like this is on text on a PowerPoint, this is what it is, and you want to get all those details, I'm sure we can get the recording, right? Zach and I will have the recording for that, and you can review that. But today, let's go a step further. Let's not focus on any PowerPoint. Let's just get right to it. What you're looking, I'm going to get this off the chart, as a matter of fact. I want a very clean chart. I only want to look at the InvestSuite here. So we're going to see some, lines here horizontally, some labels on the right. And I will go through, I just want to preface this whole thing with the InvestSuite is extremely robust, okay? Bells and whistles galore. Now, I can walk through them, and we can talk about them. I mean, all the way, if you look in the bottom left here, you'll see, this is what we call our text box, our data box, rather. And there's a bunch, it's spitting out constant real-time values. We'll go through those. But the point being is that we go the extra mile, and you can even customize these icons. I mean, everything you see can be customized, like color schemes, all the basic stuff. So we don't even need to waste too much time on that, I don't think, right? The InvestSuite, to give you like a general idea of it, I think the name kind of says it all, but it is designed for investing, okay? If we think about the markets in general, we always love to say things like, oh, the market rallied, the Dow, right? The Dow rallied over 1,000 points today. The S&P was up over 120 points today. Those are really cool. Like, that's great. If you would have said that 10 years ago, it would have been unbelievable, right? So why am I pointing this out? Because the market has a dynamic nature. So percentages are dynamic. Point values are fixed. So today we could trade a 100-point swing, no problem. That's obviously super easy. In fact, right now alone today, well, no, we're almost flat. Actually up 0.01% today. 1 point. Wow, that's interesting. You can see it right here. Okay, but it's nothing to have a 100-point swing. It is a huge thing to have a 5% swing. That's not going to happen in a day, most likely. So we want to stay focused on that. You can see over here in the labels, right? So this one here, I've removed. As a matter of fact, I should probably do this. Let's go into it. And again, bells and whistles, folks. It's very robust and all this. Just don't get overwhelmed, and I'll keep you. I think I'm going to try my best to stay focused on the basics. Okay. But what I'm going to do right here is I'm going to go to my corrections. Okay. I'm just going to scroll down my corrections. And right in through here, okay, we have some settings here. It says show correction label text. I'm just going to enable that, okay? And what you'll see there is it populated some text there, and it's notifying me if this is a correction or an extension. In addition to that, you'll see a negative value, you'll see a positive value. And it's just what you're thinking, right? So a negative value and or a correction is going to be below current price, and extension is going to be above current price, right? Let me rephrase. I'm sorry. It's going to be based on our base price, not current price per se. So extensions are above the base price, corrections are below the base price, and right now, based on the settings that I have, I'm just allowing it to track the highs. So I want it to flow with the market, track the highs. That's going to become our base price, all right? I can make adjustments to that. As I said, it's very robust. So I can set fixed values here. And why would I do that? So if I wanted to take a trade right now, not a trade, well, it could be a trade, but if I wanted to take and enter the market into an investment, let's say right now, okay, I can do that. I could double click and go back into the settings, and I can just explain it verbally here. But I could go back into the settings and I could switch that from base price to a price value, and then I can give it whatever price value I want. So right now we're trading at 59.03s, right? I could say I want my base price to be fixed at 59.03. Why? Because I'm about to buy the market. If I'm going to buy the market, I want to know all the details in advance. I have to plan out my investment so that I don't make big mistakes. Same as trading, same as everything. So I'm going to show you some of the bells and whistles here. I can do that, or, and this is the way that I personally like to do it, I have it on, I just have my base price auto-calculating, and then I'll plan my trade out here in real time. So what I'll do is just click and drag, right? So I can literally just drag that down to the 59.03s, and if I want to put it on the exact number, I can expand and, put it at whatever number I want it to be. So we'll put it right there on the 59.03s, like I said before. And now everything, if you noticed, all of these values updated as well, okay? So it's going to maintain those percentage values as I update the base price, and all of this is happening in real time. So I could say to myself, I want to do so many different things with this. And the bells and whistles come in. We're starting with the very basics, but you'll notice right down here, for example, there's some hash marks. So we have trail stop built in. We have all these historical levels. As a matter of fact, Zach has that loaded on his screen, so I'll let you, you'll see that on his when he's automating it as well. But we can show all of this historically. I can go into the data box, and you'll see all these values being populated as well. If I hover my mouse over any given bar, it'll compute and spit out the appropriate number for that time. So if I want to do some visual back testing, I can do that. Secret here, I encourage you to use BloodHound and Blackbird. Makes the process a lot easier than manual, but that's okay. So we'll see down here also these are a lot of non-values, or nan, however you pronounce that. And it basically just means they're empty, okay? And why are they empty? Well, just I don't have them turned on. If at any point I want to turn them on, all I have to do is go back in there, okay? And I want to go down to my corrections. Let's just simplify this here. We'll minimize, get down to my corrections, right? And I can show the historical level. So right here, all I have to do is make one little toggle, and voila, I'm going to see everything on my chart. In fact, I'll just click OK there. Okay, so now you can see everything historically as well. I guess I can just leave that. It's perfectly fine. Point being is that it's all there, and there's so many calculations being made. I just don't want to overcomplicate things and overwhelm you today, right? All right, so we have our base price, had that update. So I'm planning out a trade, all right, an investment. I'm going to drag price down here to current price. Let's see some information that I now have. You know what? I'm going to turn these off because I want things to be really clear. Sorry to do that, folks, but I really I don't want too much going on here. I'm all about chart real estate, you know what I mean? Okay, so again, all I have to do is click and drag. Very good. Put that at whatever price value I want. We'll just get it close to the 59.03s. And all of these other values populated and updated as well in real time. So now I'm able to go a step further. And I can say, okay, if I enter the market right now, what's some things that I might want to be aware of from an investment standpoint? Obviously, I want to be aware of the percentage values, the corrections, the extensions. But what's one really important thing that one might want to know about? Let me give you a hint here. Does anyone, take a stab at it. Does anyone, when you enter into a futures contract, okay, especially if you're going into swing trading, a hint right here, the exchange implements something if you hold a position overnight. What is it? Does anyone know? What's something that I want to be very aware of every time I enter into a futures market? I'm going to scrunch my chart up here, okay? I'm going to scrunch it up. There it is. Boom. Thank you. Absolutely. There you go. Tom, Benny, very good. Okay? So I want to be aware of the margin. And as you can see here, it's a big red warning, right? This is saying, whoa, hold up a minute. This is going to pull directly from my account, okay? And I can specify. It doesn't have to. I'll go in here and show you. If we go into the indicator itself, we have very unique account sizing. And this is going to tell me how many contracts I can trade, how many contracts I can add on, and it can be, computed different ways. But ultimately, I need to be aware of this at all times. Then on top of that, as I'm increasing, as I'm entering my position, okay, number one, and then as I'm adding on positions, number two, at one point or another, right? I don't know how much you all know about futures markets, probably a lot, even, probably more than me, I'm sure. But in the futures markets, here's what will happen. If I enter here, price goes up or down, right? But it just moves. Let's say price moves up and I, average into that position. Let's give a little bit of a better scenario. Let's say that price is here and price goes down. I enter again, okay? Well, now we've done what's called cost averaging, dollar cost averaging. So if I enter one contract here, one contract here, ultimately I've brought my average trade price down by 50%, and that's with an easy hypothetical. If I'm entering one here, it's just 50%. If I'm entering one here and 3 down here, I'm going to pull my average price, a good bit further down. All that in mind, that sounds fine, like that makes sense. And in the equities market, it's pretty straightforward. How much money do I have? And that tells me how many equity shares I can purchase, right? But on top of that, even in the equities market, you should really be acutely aware of margin if you trade on margin. I personally do not like margin at all in the equity markets, but it's just a me thing, okay? When you do that and you trade in the equity markets with margin, you pay exponentially for it, right? It's basically worse than going to the bank and getting a loan. It's a lot. So I don't know exactly. You should contact your broker, but let's say some prominent brokers, you go and you ask them, you say, hey, look, how much do you guys charge for equities margin? They're probably going to come back and tell you something to the extent of 9+%. That's a lot, okay? But let's wipe equities out for a moment. Let's stick with the futures. So in the futures market, every time I enter into a new position, okay, so I took one here and I add another, so now I have 2. What I just did was effectively double my margin. Now, another thing to know about margin, and I would encourage you all to stay in tune with the CME website if you're trading the S&P or whatever exchange it is, but get those margin rates because they're starting to increase and decrease. They're more volatile now than ever because the more volatile the market is, the more volatile the margin rates are going to be. The brokers are changing them, the exchange is changing them. But currently, I don't know off the top of my head, but I want to say it's just shy of $2,200. That's $22,000 on the ES, $2,200 per contract on the MES. So what that means is if I take a position right now, I enter into the contract, and I need to take that margin, which let's call it $2,500. I always overestimate, be conservative. So right now, I use a value of $2,500, and that's what you're seeing here, by the way. So I use a value of $2,500 to overestimate it a little bit, and however many contracts I'm entering into, multiply it by that number, right? So if I have 2 contracts, 25 at 2 is 5, you get the idea. At 4, it'd be 10,000 and so on and so forth. So a lot of people don't really know that, okay? When you enter into that futures position, it doesn't matter if it goes for you, against you, whatever, your broker, you 100% have to have the P&L in your account to cover not only your trade, but you have to be able to cover that margin too. It's very important. I cannot even tell you how important, in my opinion, that is. So, why? I don't want to blow up my account. Pretty simple. So, what's a way to mitigate that? Well, here we go. Have a piece of software that does it for me. So right now, hypothetically, if I entered at 59.05 3/4 with the account size as it is, now right now I'm using a fixed account. I did mention that you can connect it to your account. So right here, where it says account size method, okay, note that I can switch this to connected account, and then I can actually connect it to my live account, okay? That's going to pull in the real value. That's going to get your account size, and it's going to use the literal value. Now, what's really cool about this, we go and attempt to always do this, but we try to go the extra mile. Why do we do this? Well, because as I told you, I use this exclusively, so I need these tidbits of information, and although they may not seem important now, I promise you the longer you do this, the more you will realize it is of grave importance, such as a margin call. I mean, heaven forbid. But we don't want that. Okay, a little tidbit here in addition to that. Not only are we calculating this, and I'm grabbing the account and all that good fun stuff, but we actually go the extra mile and include unrealized P&L too, which is very unique, I'll be honest. And it was, it was very fun coding it in and getting all that stuff done. But think about this. If I'm in a position, okay, and let's say that I'm up in that position. So I entered and I'm up $1,000. So my account went from 100,000 to 101,000. 101,000 is going to tell me I can trade potentially more or less. Let's use some bigger numbers because for contract purposes. So let's say that I'm at 100 and I'm up, $50,000, whatever. So I enter here, and I'm up 50 grand. Well, I need to account for that because now I know that I could go out based on my open P&L in a combination with my account size, and I could actually purchase another contract, right? So it's going to track all that. And so that's what we're seeing here. Ultimately, I don't want this to ever happen, so I can plan ahead, put my stops, whatever I need to do to ensure that that never happens. And as you can see on the margin call right here, there's a little number there. Okay, that number indicates how many contracts this is calculating. So everything we do, I just want it right there. It's all about efficiency. So I can tell you definitively based on this margin call, it's computing as if I had 4 contracts long from 59.05 3/4. Okay. Notice over here we have tradable lot size at 4. I can add on 3, and then I could add on a further 1. I won't go into all the bells and whistles of that, but ultimately we can actually add on as many, we can account for in the code as many add-ons as we want to, but so we'll keep it simple right now. Okay, so that's why we put an S on the end of add-on. Add-ons, plural, meaning we can do as many as we want. Okay, so 4 contracts there. Now, let's get into some other aspects of it. If I'm going to plan out my trade, I want to say, okay, I'm thinking dynamically here. I want to enter at said price. I want to have maybe a stop in place, a target, maybe a trail stop, okay, the gist of it. And everything is right here on my chart. You can see it functioning here in real time. So I can have a trail stop right now at $54.99 based on current price. I can set that at any percentage value that I want to, okay, and plan accordingly. But I may say, you know what, let's do something fun. Let's say that I'll use my terrible thing. So I was looking to buy the market. I have my entry down at 48.16 quarter. No joke, it came to 48.32. I missed it by 16 points. I think it was 32 quarter. I'm not kidding you. I missed my entry by 16 points on the S&P. It's still heartbreaking. It's still heartbreaking. I don't know. But let's pretend for a moment that I caught it somewhere down here near the lows. With the InvestSuite, what I can do is just tidbits of information all over the place, but what's more important about this is the ability to build an ongoing investment plan and portfolio with it. But even just the little tidbits along the way, such as to say right now, or when I initiated the position, but at any time I can say, okay, you know what, by the time we get back, what's it going to take to get me to new highs? Well, luckily, all I have to do is click and drag. So in order for me to make new highs from the position in which I entered into, I would be up approximately 25.4% before those new highs are made, okay? So I can then determine, further calculations if I want to. I can specify. And let's go back and let's just reset, right? So if I am like, oh boy, I don't like what I've done here, right click will reset the levels and it's going to go back. So let's pretend here that we entered like we talked about. And I initiated a target. Zach's going to show you this here in just a moment. So again, complete automation. He gets to have a lot of the fun. It's so fun when you get to combine our products and so on. I love that, but you'll see it. So if I want to plan this out, I can say, okay, from my entry, I want my target to be extension of 5%. I could do any percent. For those of you who are fib traders, let me go into the settings real quick. So one of the cool things about this is everything we do here is dynamic. So for example, if I'm a fib trader, I may have many levels or I may just have one, who knows. But this right here gives you the ability to input as few or as many levels as you want on your chart. So right now, if I did this, okay, all of those extensions are going to be, they're gone because I told them not to be there. And these are the real time. I could also do the same here for the historical levels. Now these are going to be very important, especially when Zach comes on. These are important because those are the numbers that we're going to be using for back testing. Why? Because they've already happened, so therefore we can back test against them. The real time, you can't back test real time, right? Kind of goes without saying. But anyway, so I could do this, and again, those extensions are going to be gone. I'm not going to click OK on this right now because I want to use those for illustration purposes. But the point being is that it is there, and we can, as I said, set as few or as many. Now, let's say that we weren't here in this session. I wasn't trying to show you these bells and whistles and all of that. What I would do is I'd remove them. Absolutely. I like clean charts. So I have my stuff running, and on that I have only the percentage values that I am using. If I'm not using it, I don't put it on my chart because otherwise I'm going to be like, what's that there for? Or it's just a distraction, and I don't want to do that. Okay. So we have that 5% extension followed by the 10, 20. This could be 38.2. So let me go back in and show you. I'm sorry, I forgot to do that. I'll just scroll down real quick here. Okay, so right here, I could also do something. Maybe I could back these out, or let's just say, no, I love those, but also I want to have a 38.2 in there. Maybe I want a 61.8. I don't know. Again, these are for fib traders. Those are common fib numbers. We'll talk a lot about those in our training, and then just in general, if you have questions, I'll be happy to address those too. But you can input any value here. That's the point. And if you want it to be a correction, let's say that I wanted this to be a negative 38.2. We'll just put a negative there. Okay, that's it. So now it's going to show you a correction and an extension. There you go. Okay. All right, very good. So again, the ability to plan that out. I'm going to do this, I think. Zach, if it's okay with you, I may turn it over to you at this point. Let everybody see just a little bit of what I've talked about, and let them see how you can put it into action with the automation. I believe you've already done that. So we can have a look at what Zach has done, and you'll see over time how BloodHound and Blackbird come into play, where they can take all of this information and put it directly into action. Okay? Is that okay with you, Zach?
All right. Yeah, I'm ready to go.
Boom. Awesome.
So let's see here. Okay, let me get this sharing switched over. Let's see.
So Zach's going to take over screen sharing is what he's doing here, so you all will be seeing that momentarily.
There we go. All right. I should see my screen now.
Yep, we got you up, Zach. You're good to go, man.
All right. Yeah, so shark indicators, we have two main flagship products here. So we have BloodHound, which is right here, and it's also on the bottom of the screen down here. And I think most traders think of it as a discrete signal generator, but really it can be whatever you want it to be. It could just show you kind of the bias of what side of the market you should be on. It has fuzzy logic. It's actually built on top of fuzzy logic. If you know what that is, most people, we found that over the years, most traders, don't want to think in terms of fuzzy logic, and they just want to go for the discrete entry signal there.
Fair point, for sure.
But just quickly, fuzzy logic is it gives you a percentage feedback as to some kind of bias, right? So you can have BloodHound give you a percentage feedback as to how much you should be looking to go long or how much you should be looking to go short here. But what you're seeing, these green vertical lines here, are the discrete signals, right, that we built based off of Will's InvestSuite indicator here. And this kind of illustrates nice and cleanly in this signal over here, the exact type of signal that we built here. So when price pulls back to this -5%, and we can follow this line here, right, all the way back here, so we can see this is the -5%. The next line down is the -10%, right? So I just have the default settings for this indicator on here. And if you ever get kind of lost, just remember that the line here in the middle that's following the market up, stair-stepping up, is the 0%, right?
And the text on that too, if you'll show them right there where it says base price.
There you go.
There you go. So you'll always, if you see the text base price, that means it is it is 0%. That's what that means.
Yeah. So we're calculating these percentages off of the base price here. Yeah. So in BloodHound, what I did is it made a simple crossover signal, right? So when the market closes below, the 5% or the -10% line, and then when it crosses back up, right? So you can see this is a conservative approach here. So when it crosses back up, we're generating a signal. And to show you, right? So these are just simple crossover signals. So we have, what's called a crossover solver here, right? And so you have, for a crossover, right, you need two inputs. So the first input, A, is we're looking at the closing price, right, of the market, of each bar or each day, right? So this is a daily chart here. So we're looking at the closing price of each day, right? And the second input B, is Will's InvestSuite, right? And so we're reading this -5 and -10% lines here. So, right, so that's how we get that crossover there. And with BloodHound, we can do lots of other approaches. Like we could generate a signal as soon as price crosses down, so you could get a more liberal signal there. You can slice and dice these signals any way you want with BloodHound.
Just to throw this in there too, I think like this is one of the things I love personally about BloodHound, because number one, it's giving you the ability to go back and see the signals, right? But not only can it do one thing, it's not really limited, right? There's so many things that you can do with it, and what he's talking about right there, yep. Zach and I were discussing this a little bit. So in the event of, let's say, a market crash, instead of just throwing an order at every percentage that you come to, using what he's doing here is a little bit more of a conservative approach, because hypothetically, if the market is crashing, maybe I don't want to take a position even on my percentage value. So he's saying, let price go below the percentage value and then close back above it, right? So again, in a market crash, he can actually illustrate that in just a moment with the trades, but that can save us in a crashing market, right? Am I saying that?
Yeah, right. Like right here, what's currently, going back, just looking at year to date here. Yeah, right. We've had these, precipitous tariff drops here. And there's no entry signal yet, right? Because the market, while it's crossed below the -5 and below the -10 there, but it hasn't crossed above the -5. At least not yet. Who knows? Looks like we might.
We're close, man. We're so close.
We're so close. Great. We might get that signal today there. Yeah. Right. So, so a little bit more about BloodHound. It has what we call solvers, right? So it's trying to solve for a particular condition, right? And everybody knows what a crossover is, right? Two moving averages crossing over, right, or price crossing over some kind of line there, right? You can check the slope of an indicator, make sure your indicator is sloping up or sloping down. You can check what's called a threshold level, and most people just think of it as like the zero line, some kind of level there for, say, like the MACD. Is your MACD above or below zero? Your stochastics, is your stochastics below 20 or above 80? right? Those are threshold levels there. And the workhorse here, what we're doing all the time, whether we're conscious of it or not, is the comparison solver, which essentially on a chart is something above or below something else, right? That's the vast majority of what we're doing. Is we're seeing is one, is price above or below something else, right? Is some indicator above or below some other indicator, things like that, right? So, the point I'm making is, right, you have all of these different types of analysis there when you're analyzing price and or indicators there. So, so again, right, we just, for this type of system here, or investing, right, all we really need are crossovers there. So, and so yesterday, we built the 5% crossover level, and then we have another signal here. So you I like to think of these as putting different signal types all within one system here, so you can switch between them. So if I double click on this, now what we're looking at is the 10% crossover level. So let's see if we have some. Yeah, here we go. So we do have, right, so again, year to date, right, we do have two 10%, cross up here signals. And if we go back, there we go. Yeah, going back last year, here's a couple more here. So
this is where those shoulda, woulda, couldas come in, right?
Yeah, right. Isn't hindsight always 20/20?
Always 20/20.
Yeah. So that's a quick summary there of BloodHound being able to build custom signals or biases. Again, BloodHound doesn't have to be discrete entry signals. It could be a bias as well. So let me put this back on the 10%. I'm sorry, 5%. Take it off the 10%. And now, so BloodHound is the indicator component when you're building a system here, and then ultimately, in order to backtest or to automate, the next step is you need the strategy component, the strategy class there. So let me get actually Blackbird turned on. We'll get this fired up here. And so I already have the system loaded from yesterday, and so as soon as I turn Blackbird on, it instantly did some backtest results there for us. So let's scroll all the way back to the.
So basically, just combining that right there, you're ultimately creating the whole solution. You basically spit out the signals. You're now populating the trades with the combination of BloodHound and Blackbird, right?
Correct. Yep. So, and this is something that all trading platforms have in common, right? You have your indicator class. Everybody knows what those are, and then all trading platforms have a strategies class, right? And it's the strategy class where that manages your orders. So that's how you get the back testing done and the automation done there. So, and let me open up Blackbird here quickly and kind of take it for a quick little spin here. So in Blackbird, you can plug in your trade signals up here at the signal section here, and a Blackbird allows you to plug in as many trade signals, entry signals, and exit signals as you want, and then they all get combined together as if it's just one signal source, right? So whichever indicator or BloodHound system fires off a signal first, that's the one that Blackbird will act upon there. So I have loaded in here, right, the InvestSuite demo here, which we can see here's on the chart. And actually, if you're really observant, you'll notice there are two bloodhounds here on the chart. So one is the white text, and the blue text, this is the bloodhound that's running inside of Blackbird here. So to help eliminate confusion, let me take off the bloodhound one. There we go. Let's take that off. There. Now we'll just be left with one. I'm going to switch the signals over to 5%. There we go. So back to Blackbird here. Yeah. So we have the 5% pullback entry and a 10% pullback entry in this demo here. So when Bloodhound generates the 5% signal, right? And again, that's the green vertical lines here. We call these racing stripes here. So actually, a friend of ours got a nickname these racing stripes. So he was an avid racer. So we didn't know Jeremy and I didn't know what to call these. And our buddy, he's like, he was trying to describe to us, what he was doing. He's like, yeah, man, he's like these racing stripes all over my chart. We're like, all right, it's thick. Yeah.
Take it and run with it.
Yep. So when we get the 5% signal here, and we can see here, we can select the 5% or the 10% signal, coming from Bloodhound that I just showed you there. We get our first entry order here, and then I set this up. So again, there's lots of ways you can slice and dice this. We could have set this second order up to enter on. Let me close that out. To enter on the second Bloodhound signal, which we don't actually have any 10% right here. But instead of doing that, what I set Blackbird up to do, and I might get the names of my children mixed up. Sometimes I'll call Bloodhound Blackbird and Blackbird Bloodhound, so forgive me. So I set up the 10% as a limit entry order. So as soon as we get the first 5% pullback signal, then Blackbird will place a resting limit order here on the 10% line, and it will trail it up if we want it to there. And actually,
effectively, cost averaging, right?
Yeah.
Yeah, into your positions.
And let's go forward here and find one of those 10% orders being filled. So let's see. There we go, right there. Yeah. Let's see. Where are we? This is 2015. All right. So the end of 2015, November. So, So there is our 5% signal, and then Blackbird put a resting limit order there. Right. Market kind of consolidated around, and then finally picked it up right there. So, and there's the target there. So if we go back, and I need to shrink this up. There we go.
Food for thought on this as he's doing that too. So the way that, unless you change anything, correct me if I'm wrong here, but ultimately what he's done here is set up. So your cost averaging, you got your 5% entry, which is a crossover, right? That's to try to mitigate in the event of a crash. The 10% is, let's just buy it 10% because we're cost averaging into this. But then he also set a target using the 5% extension. So just that, that's what he's doing there.
Yep. So yeah, I was shrinking up my chart here so that we can see. So at the 5% entry, again, this is our zero or our base price here. And so the first line is going to be the 5% extension, and then we can just barely see the 10% extension there. Yeah. And, so when you're kind of doing your own and backtesting analysis here, you can set those profit levels at whatever you want here. So I'm going to open up this profit target here, and so we go into the initial placement here, and we can see, right, it's pulling that profit target price from the indicator, the InvestSuite indicator here, right? And so we open this up, and there we go. There's our indicator. We can open that menu up, and here, all right, we have all the indicators, right, that I have installed on this machine here, right? We can see I have all these indicators. Now, of course, there's very few indicators that actually are suitable for using as a profit target, right, price. So let's see here. Go back to PFA. There we go. So with the InvestSuite indicator, let's see here. There we go.
This is that dynamic nature right here. Because as he's touching on this, please remember what I said. Like, you can put as many or as few in there as you want, and they can be any value. So as he's, basically extracting that data, we can dynamically provide it in a way, because what he was touching on a second ago is about your ability to test this. And this is where I get super passionate about things, because we try to provide, like I said, imagine having Wall Street on your machine, but at the same time, we need to go in and say, I'm not comfortable with this, or maybe I want smaller, maybe I want to enter more often, like a 3% correction and look for a 5 or a 7% extension, or dollar cost average in 3 times, or look for 2 different targets. The point being is that it's so unlimited with what you can actually, test and accomplish here.
Mm-hmm. Yeah. So one thing to note, one thing I didn't get into in yesterday's sales webinar is the dynamic nature of this indicator. So this is something that that is very rare that you'll ever come across. So these 2 parameters here, right? You can put in your own custom levels there. And when you do, if you reduce the number of percentage levels or increase the number of percentage levels, the plots here will also change dynamically. So these are not fixed plots here. They will change the price level, or they will disappear on you, right, if you delete a level. If you delete a level out of there, they will delete on you. So one thing to note is when you are changing these, and actually let me do a little example here. Yeah, so I'm going to remove this 20% here. So actually, let's do this. Let me delete the 20% out of there, like so. All right, and so when I do that, right, the plot doesn't disappear instantly. So that's beyond what NinjaTrader can do. So once we basically reinitialize the indicator, then the indicator can remove this plot here. So if you're changing these values here, what you do is you just need to change it first, and then we can close that out. And actually, I'm not sure how far we have to go out, so I'm actually doing this on the fly here. And yeah, okay, there we go. So all you need to do is close out this select indicator window here, and we can see now the 20% is now gone, right? So back to kind of the main point here, which is, right, we can go in and you can select whatever profit level you want to backtest against here. So let's say let's do, how about, let's do a 7% in here. So put comma 7 in there. Both, actually, I think probably we only need the historical. 7%, but
Yeah,
just for good
correct.
measure, we'll put it in there twice.
Absolutely.
So right, and then we can see, right, the 7% hasn't been added yet, so we just need to close out, and then let's open this back up. There, open up the indicator window here, and there's our 7%. And we can see that it looks like it was automatically selected, but it's only because of the fact that we injected another level in here, right? So it didn't actually just automatically. So Blackbird is remembering the the plot number, right? So if we kind of count all these plots, count them going down, right? It's just remembering which number down did it last have selected there. So, yeah. So there we go. So now we got the 7%. And so now, if we wanted to, actually let me go, and I'm going to adjust the other one to 7% as well.
I told you all. See, this is how it goes. Zach, he gets to have all the fun,
Yeah. All right. And we got to make sure that we get those commas in there correctly. And so again, right, I put the 7% in. Doesn't exist yet, so I need to close this out, open it back up, and there's our 7%. And so now I just need to go down and select it. There we go. Click OK, and then I can click OK, and now I can reload the chart and get new backtest results there.
Nice. Man, that was fast too. Having the tools to do this is just. Could you imagine having all of this, 20 years ago?
So let's see. There's a 5%, and let's see, where was, I guess, yeah, 7% is right about there. So I don't actually have these. I don't have on my chart the 7%. So, but we'll just kind of have to imagine. So yeah, that looks about 7%. So that's 5%. We can see it took profit there. So that's about 7% right there. Yep. And then for the 10% entry, right? So yeah, our 7% is right about up there. Let's move this over here. And yeah, there we go. So there's our 10%. So, right, so this is all pretty easy and pretty straightforward. So with Bloodhound and Blackbird, it makes it real easy to take a look and figure out, as Will's been saying, what kind of levels suit you best as a trader there.
And on top of all of it, and again, correct me if I'm wrong about any of this, Zach, but the way that Bloodhound and Blackbird collectively work, it also empowers the performance, right? So, for example, when he's talking about back testing and things like that, you can actually pull up the trade performance of all of this as well. So, I mean, because when we're back testing things, that's kind of the purpose, right? We want to be able to go in and actually pull values and things. So, I mean, it's that easy.
Yeah. Looking at your backtest results again is a component of the trading platform that you're using, right? Every trading platform allows you to pull up, the statistics on your backtest results there. So NinjaTrader calls it the strategy of performance there, and so we can go into Blackbird and look at the historical results, right? And there we go. So yeah, right. It gives you all your data there, all your statistics, right? You can take a look at an analysis there, look at your equity curve, look at the individual trades there, and all that good stuff.
Yeah, the combination here is what I think just sets it all in motion, right? It's everything. It's always, I mean, whether we're talking about trading or investing, it's always about initiating the plan, right? And knowing that we have the right plan in place, being able to theoretically go back and ensure that, and then being able to follow through with it without, like, all this, there's so much subjectivity and discretion. It can be very overwhelming and frankly just create too many emotions, right? But when you can do it this way, you're removing that component of it. I think it's very powerful to be able to do that for, confidence levels and so on.
Yeah, so I don't know, did I miss anything? Well,
No, I don't think so. I mean, hey, guys and gals, so if you have, now would be the time, okay? So if you have questions, you want to get them addressed. Let's say you have a question about anything and everything right here that Zach's done, any Bloodhound, Blackbird questions, anything about combining the products, whatever it is. If you have the questions, go ahead and spit them in there. I'm sure he'll accommodate a few moments here just to get the questions addressed. We can pop back out onto my charts in just a moment, and I'll be happy to do the same, address any questions that you all have, of course. But yeah, let's just, I like to jokingly give a moment of silence so that a lot of times when we're talking, they haven't really processed what questions they want to ask.
Yeah.
So I'll just back off for just a second and give you a moment. If you all have questions, just throw them in.
I'm just curious, is there anybody in the room here who also joins the Shark Indicator workshop?
I think I saw earlier, I believe it was John, earlier was mentioning you doing your Q&As. Yeah.
Oh, okay. Yeah, because I know if I had one or two people from the Shark Indicator workshops in here, I'm sure they would have some questions. They would be used to knowing what to ask about.
That's it. That's what it's all about. That's why I use the word overwhelming a lot, man, because it is a lot, especially for new investors, traders, it's of the like. It's a lot. I mean, and it feels overwhelming, but it's not. At the end of the day, this is a simple, you kind of simplify it to the best of our ability, and I just don't want people to feel overwhelmed. And here you go. At the end of the day, if you are feeling overwhelmed ever, it's with PFA. I know with Shark Indicators, I don't want to speak for Zach, but in my experience, I will say they are fantastic with support as far as, standing behind their products and their members, etc. And I can tell you, as far as PFA is concerned, we absolutely do that as well. So if you do feel overwhelmed, or if you have questions, you may have questions tomorrow, this afternoon, ongoing. I know that both of us collectively will be here to support you guys again.
Yeah, man. Full email support. Any question. And it's a one-stop shop, so all questions can be answered at support at Shark Indicators. Right. Every business these days has a support email address, so same with Shark Indicators. Right.
And I just pasted that in, folks, for you. If as he's talking there, you can get that from the chat if you want, and instead of trying to type it.
Or, of course, you can just go to the Contact Us page here at Shark Indicators. Just go to Support there, and it's right there at the bottom. There you go. And, so you could just type your question in that way if you'd like. So, what am I going to mention here? I did have something. Let's see.
Paul's asking there about, so have we tested it on Renko bars? You can work across bar types, but here's the thing. What I would say about that, okay? And there's no right or wrong here. Let me just get that right out of the gate, okay? There's no right or wrong here, but think about it this way. And this is what I mentioned from the very beginning, the offset of the entire presentation, right? I want to tweak mindsets. We want to take this and start to think like Wall Street, right? Or whomever. When we're talking about Renko bars, when we're talking about things like that, footprint charts, or supply and demand levels for that matter, anything that we do when we're talking about things like that, our mind has immediately gone to trading, just like that. Okay. Again, there's no right or wrong here, but what would be? Let me give you food for thought. What would be the difference in trading a Renko bar versus trading a literal bar chart or a candlestick or a line chart, right? I mean, at the end of the day, because the markets are dynamic, we need to be dynamic with it when it comes to investing. So the bar type, you can test it on all you want to. I encourage you to do that. But it's not really, I don't think, going to be that impactful. Your bar type really doesn't have anything to do with investing over time. So it's not trading, it's investing. And hopefully that helps.
Yeah. It's just to talk about that broader topic there, somehow, somebody out there, put out the notion that some indicators don't work with some bar types, but ultimately, every indicator works with every bar type because bars are just price data, right? Open, high, low, close. That's it. It's just numeric values. So all the indicators work with all bar types. It could be that if you ever had to put a hybrid Renko on your chart, the hybrid Renkos do make your indicators look kind of funny, especially going back to the classic indicators like a stochastics or a MACD. Old traditional indicators do look really weird and kind of skewed on a Renko chart, but that doesn't mean they don't work on a Renko chart. They still work. You just got to get used to that new nature that Renko charts cause the older traditional indicators to look a little funny, a little different there. So for Bloodhound and Blackbird, it's all just price data. So it doesn't matter what kind of bar type you're using there.
That's awesome. I always like it too. So with Zach, for example, here, he's I'm not trying to put you, don't get me wrong, I mean, I don't mean to put you on a pedestal or I definitely don't want to put you out there or anything like that, but kind of in my opinion here, what you're hearing is a level of knowledge, right? Because Zach has clearly been doing this for a long time. They've been in the software, environment. He's, I don't want to speak for him as far as what he has or hasn't done, but the point being is that just listening to the conversation, you can hear the level of knowledge. I love it because I'm sitting here and I feel like I'm getting educated. It's really nice. So I would encourage you all, if you do have questions, for sure. He's a great individual.
Just so you know, Will, I don't think I'm seeing all the questions coming in for some reason. So.
Are you seeing Paul? Let's see. Do you see a recent question by Paul?
No, I do not. I only saw one question from Tom M. back in the beginning. And then I see yours. Yeah.
Okay. No worries. I'll read them out to you. Paul is asking, I think this is really PFAInvestSuite related, are you using AI to assist with finding the levels? I use Shark indicators and backtest Renko bar. Yeah, so what is AI? I mean, look, at the end of the day, AI is code. That's it. There's nothing fancy about it other than what they've provided it. So I suppose I don't want to try to say some fancy terminology, but I suppose if you wanted to say, is there some AI involved? Perhaps. But again, AI is nothing more than code anyway, right? And so we're deriving those levels in multiple ways. There's different calculations that can be used to derive those. So your base price, right? How do you get that base price? Things like that. So it can track highs, it can track price values, it can track highs, lows, closes, etc. So there's a lot of things that it can do. You're saying there too that you back test on a Renko bar. Let me just throw this out there. One thing that maybe we didn't mention already. By the way, that target was reached that we talked about earlier. We'll talk about that on my chart in just a moment. Renko bars. Let me tell you the probably the biggest downside of them that I can give you from this. So we're talking about investing, right? How many days you have loaded there, Zach?
Going all the way back to 2011.
Okay, so he's going back to 2011.
2011.
I will tell you right now, if you put a Renko bar, or especially like a custom Renko bar on your chart with 5,000 days, you might not ever get it loaded. That's, you know what I'm saying?
Right.
Like that's the downside of using that bar type, or it's not just Renko, but any tick-based, bar type. It's going to disallow you to properly go back and look at true investing, in my opinion. Another thing that I just want to throw out there, again, food for thought. When we're talking about tweaking the mindset, so think about the market in a box, okay? You're looking at his chart. So think of the chart scale, what they call the chart scale. It's just the rectangle, and so think of that as a big, just a box. When we're thinking about investing in general, let's say that you're going to buy a new vehicle. You don't have price data like this, so you're already thinking inside of that box. I wanted to buy a Ford pickup truck. 5 years ago, I went and looked at them. How much was it? Today, so let's say $50,000. Today, I'm going to the car dealership. That is $75,000. So I didn't have all of the volatility within that. I literally had horizontal. So from an investing standpoint, my opinion is we want to get something, and it could be anything. It doesn't matter the chart type, because we're working beyond that box, right? We want to get outside. But we always want to think horizontally in the market, because we're ultimately just trying to buy low and sell high, right? So all I need to do is think in a horizontal fashion, and then get to one from and to. So from one point to another. All this is showing you is how you got there, right? So the context, and that's very important, most especially for trading. But when we're looking at investing, wealth building, 401ks, just general, could be shorter term investing, things like that. But when we're looking at it that way, I really want to try to tweak that mindset so that we're getting outside of the box, I guess, right? So horizontal, and I don't need all the interior jargon, so to speak.
And, as the name implies, InvestSuite. So Renko bars are definitely not really applicable, to the daily time frame. Those are traditionally, I'm not even sure the Japanese ever used Renko bars, to track daily movements. Actually, no, I take that back. They must have, because back when they were created, there was no intraday trading. So sorry, so I just kind of talked myself out of it. But the markets are definitely, I don't want to say predictable, but their movement. What's a better word for predictable? But
you can predetermine it with a high degree of accuracy, something like that. Consistency.
Yeah, when you're looking at daily charts, the price action is, I can't think of a better term, but is more predictable versus intraday. So this, so I think it's fair to say that you probably want to be using this, since it's for investing on those higher time frames there. But,
and I mean, honestly,
all these levels, is great. You could definitely, I'm sure somebody's got a methodology out there that, could apply these methods to the intraday charts there.
Yeah, it can be done. I just, I guess I would look at it and just, like I said, Zach mentioned it a moment ago. The name says it all, right? So trading is one thing, investing is another. We use the terms a lot together, but let's define it. Let's just get there. So trading is shorter. It's all about time. That's it. It's time delay. So if we're looking at investing, there is also a time delay or time factor, but generally speaking, it's expanded, right? Now, that being said, in the recent market conditions, I can show you the exact statistics. This is the point in the InvestSuite. I can tell you, give me just one second to bring back up my chart. I can tell you, as I'm looking at the chart right now, we declined 21.63%, just like that on the S&P, and we've recovered exponentially in no time. So, you know, it's a time. It's simply a time factor. But going back to that horizontal thought process, it doesn't matter. If I get from 50 to 100 in 5 minutes, I still started at 50 and ended up at 100. If I get from 50 to 100 in 6 months, I still got from 50 to 100. So the context is all about time. That's what it is. So I can put any bar type, I can do any of that, but at the end of the day, we're going to get from one point to another. So I guess it's all about what vehicle do you drive, you know? Like, do you love Teslas? Did you buy a Tesla? I don't know. Do you love Ford or you know, Lamborghinis for that matter? I don't know. I can tell you a Lamborghini is probably going to get you there faster, you know? But it's still the vehicle that we're driving, and I just want to get from one place to the other. I think so again, tweak the mindset. We don't want to think, you know, short-term day trading or things like that. Although, can you put it on a 5-minute chart, 10-minute, an hourly? Yes, you can, but that's not its sole purpose. It's not its design, right? PFA, as you all may or may not know, if you're familiar with PFA, you've been doing it for about 15 years. Trading is, you know, has always been what we focused on as far as the training education, okay? But when we are training in that way, we're looking all the way up to investing as well. For example, we can simply look at trading longer term supply and demand versus shorter term, and that's applicable. But what we're talking about is a version of pattern recognition, okay? So those are more designed for context. That's the interior of that box. Remember, we were talking about the box earlier. So trading is more about what you're going to do inside of the box. Investing is more about I don't even care what's happening in the box, right? Just show me some values. Let's be dynamic with it. And so definitely two different things. But having those stats there, we took, you know, this is an evolution, folks. I'll be honest with you. It's just evolved, and the more that I learned over time in the markets, the more dynamic I became, right? The more I went in from very shorter term, and I realized how important it was to focus on the bigger picture, equal to or greater than, right? I mean, it's very important. And so, again, I joke around about like we all do, what if I would have known 20 years ago what I know today? And so I think that's very critical. But getting out in and out of the box, trading is inside of the box, investing is the box, I guess, is the best way to say that. So pattern recognition, that's what PFA, we do that all day, every day, right? I mean, we're trading. I just told you the trade. Matter of fact, again, the target was met just a few minutes ago. Okay, we'll look at that in just a second. I'll jump you back over to my my charts. That's what we do day in and day out. So if you're interested and that's what you want to do, great. Come on, we got you. No worries. This in particular, though, it goes so far beyond, it gets outside of and or creates the box so that we can not only have trading, we can build entire portfolios, based on investing. So think about hedge funds. What do they do? I can tell you from my experience, and I've been in hedge funds before, they're not... They definitely are some, they have their desks and they'll, this and that. They're traders on the desk and so on. But generally speaking, when you go to a hedge fund, you're going to, hypothetically have some funds. Let's say I go to a hedge fund, I got, $500,000 or what, because usually they require, so maybe $250,000. Okay. So I give them $250,000, right? They're not going to take and day trade that money. They would take it and typically more like what we call position trading, which again is a time delay. That's all it is. So they're taking and still doing the same thing, but their positions may go on for, weeks and months, okay? Then you step into mutual funds, which, okay. ETF funds, I would say, I like ETFs a little bit better. I don't deal with mutual funds, but ETF funds, that's your next level, right? Which means that ultimately people who invest in ETF funds typically, which, the institutions, all these, even mutual funds, that's what they're doing, a lot of them. When you get into that, basically they're long-term holders, right? They want to put it into an ETF fund and just kind of let it do its thing. So you go from one all the way to the other, but what if we had the tools to do all of it? Okay, so that's what PFA, as far as the community, that's what we try to do. Short-term trading, that includes all the way down to day trading, all the way up to long-term trading as well. And the context inside that box, if you will, is the swing trading and position style trading. So all of the above, it's covered. You get the idea. But this particular product, okay, and collectively the products, meaning BloodHound, Blackbird, PFAInvestSuite, they are designed to get a dynamic thought process for investment portfolios, and the time frame, I would strongly encourage you, listen, if you're a shorter term trader, here's what we do, okay? It's as easy as this. We can get you those templates from, Zach. He'll provide them to me, and then I'd be happy to provide those for you. If I'm a shorter term trader, here's what I'm thinking. I don't want to wait for a 10% correction in the market. How often am I going to get that? Not very often, right? Maybe I want to think smaller. How often do I get 2% corrections in the market? A lot. I mean, those we get a lot. And so if you go out, we don't have to think and guess at it. Let's put it into automation. So now I'm saying, oh my goodness, I'm getting 2% pullbacks, frequently. Okay, well, maybe I don't want to just put my money in there and allow it just to go, though, right? I'm thinking now more along the lines of swing and position style trading, not investing. Okay, so now I need to implement different features, such as to say a stop, right? I think it's very important. Remember, we need to always be aware of the margin call in the futures markets and others, equities as well, if you're trading on margin. But we need to be aware of those things. So just bring the values in a bit. Going to get a lot more, but I would encourage you to think about this. Food for thought for tonight, maybe. How do the markets work? Okay, is there any comparison to what has happened today? Not just today, but over, let's say, this year, because we've had some extreme volatility, right? Is there any comparison to what we've done today from what we did 20 years ago? All right, there is. Absolutely there is. Now, it's not what you're thinking. No, we're not going to get 100-point swings 20 years ago, right? Definitely not. But will we get 1%, 2% swings? Absolutely. So now I've taken from being inside of the box, and I've moved to being outside and or the box, and I'm thinking dynamically. So, yeah, I mean, again, if you want to swing trade, things like that with it, you can absolutely do that, automate it even. Just think about percentage values similar to time frames. Smaller the percentage values, the more trades are going, or the more signals. If you see, he's getting a lot more signals there. You see that? So when you shorten your time horizon or you shorten your percentage values, think about those two in the same. You're going to get a lot more. Okay, so then we need to think about a strategy to accommodate that. Well, a long-term strategy, that's pretty easy. I can dollar cost average in, and really, do I even need a stop? Probably not. So the shorter the time horizon or the smaller the values go, then I want to be a little bit more aggressive in building my strategy corresponding to that style of trading or investing. Zach's over here having fun. I love it. I'm telling you, Zach, if you could see him, man, you can see you, Zach. I'm telling you, see thinking. He's on it. I love it. Oh, wow. Oh, sorry, folks. By the way, if my throat's giving me a little bit of a tough time, so I apologize about that. Thanks, Joel. Yeah, so hopefully that kind of helps. It can be used for shorter term. Your question was, can it be used for day trading, or is it mainly focused on investing? So it, is built with investing in mind. It can be used for shorter term horizons, but I would probably, I would discourage day trading, I think, but you don't take my word for it. I mean, at the end of the day, test the theories, right? You can do that with the automation. Absolutely.
There. Sorry, I had my microphone muted earlier. People saw my mouth moving and nothing coming out. So, yeah, I was just saying that. Yeah, as you were talking, you kind of gave me something to do here. Yeah, so I got the 2% pullback signals in there, and so now I'm adjusting Blackbird so that our first order here will enter on the 2%, and then the second order here will, and actually let me fix the names there. We'll adjust the names so we know exactly what they are or going to be. All right, so 2% and 5%.
So he's just reducing, right? That's all he's doing. Same as the time horizon, same as the values.
Yeah.
Taking them in a bit.
Shortening that time horizon. I shouldn't say time frame. Yeah, we're still on a daily chart here, so 5%. Okay. And, all right, I do need to go into the trailing here for this scale-in contract and make sure I get the indicators changed over everywhere. Let's see here. I was doing 2%. All right, we'll switch that to 2%. And I believe the 5% is going to become the 2%.
Yeah, reload.
So let's select that. And then I do need to close it out and open it back up and just double check those plots. And let's see.
So you put a positive 2 in there?
Oh, yeah, I did. I did. Thanks for catching that.
No worries, man.
So there we go. Get that 2% in there. Okay, now this will switch over to the negative 2%. Let's close that out. Open up the indicator again. And there we go. Okay, now our limit entry order is going to be trailing that 2% pullback. And I'm just going to double check our initial placement here. Well, and right, so let's put that at 2%. There we go. And let's open it back up and double check it. There we go. Now it's at 2%. So great. And
seeing this in action. It doesn't get any more, real than that, right?
And I'm going to double check my profit target as well. No, that's at 7%. All right. Yeah, instead of changing all the indicator settings here, I can actually take a little shortcut. I'll just delete that profit target. And then I know this profit target over here is all set up correctly. But I'm going to double check there. Yep, so I got the positive 2% in there, and that is set to the positive 2% for the target. All right, so now I can go to this order set and just copy. Let's see. Yes, copy that. And then let's go in and double check. And that is on the positive 2%. All right. So now we have everything, switched over to some tight, more narrow levels there. So now let's go ahead and see what we get. Let's do the reload, get some new back testing.
And one thing to note about this as he's doing that, there you go. So, yeah. So you see what I mean? It's a time horizon. It's like you want to be a short-term trader investor, shorten it up a bit. You want to be a longer-term, expand on it. I hope I'm making the correlation. That's all I'm trying to do. I'm simply saying if you want to look at swing trading, shorten it up. It's the same in what you're used to. What the mindset tells us is conventional, right? We're inside of that box so much. So it tells us, hey, if I want, what's the difference, everyone, from day trading versus swing trading? Time. It's just time. So the correlation between a dynamic version, it's not so much time as it is, percentages.
There. All right. So I just caught a mistake. I actually put both of these at -2%. So I'm switching this up here. There we go. So we're going to do one entry at 2% and the other one at 5%. That's what I meant to do.
You love cost averaging.
Yeah, talking and building. Your mind does not keep up quickly. All right, so let's make those adjustments there. But I guess, my mistakes is showing that it's very easy to go and switch things up, and test the new ideas.
And and efficient. Like the products there, it's making everything super efficient.
Yeah, super quick. All right, now let's do a reload. Yeah, because we're expecting these entry points to be spread out a little bit more. So let's reload here again. There we go. That looks a little better. All right, let's close that out. There. And all right, so going back to, let's see, 2011 here. There we go. So there's our 2%. And now we can see 5% there. All right, 2%, 5. And those much quicker, targets there. There we go. All right, 2%.
So this is, as Zach is doing this is incredible because remember, all you have to do is do exactly, there you go, just like that, right? So compare and contrast, because what he just did was build two totally different systems. He ultimately built like a version of a longer term, and then he took it a little bit shorter term, right? And so testing this all, building, like if your personality is, no, I have to be active in the market, then of course, shorter time horizons is your thing. If maybe not so much, then it goes the other way, but maybe you do both. And then again, we have short-term trading that we can do and longer term. So that's what I do. So what I do is I like to not stay so focused over here. I like to do my thing, use the InvestSuite. I do, trade, but it's not, call it trade. It's more position style, right? So I don't like to look at that every day. I don't want to stay focused on it, but I need something to occupy my mind, as if I don't have enough with all this. I have plenty. But that, all joking aside with that, I need something to focus on a little bit shorter term too. So that's where I do the really short term trading, like kind of what we were talking about. And if you go on the live stream, you'll see those. We do that daily, right? So I'm doing both. I'm doing it for wealth building. I'm doing it for just to stay occupied, right? And shorter term, I guess people refer to that as wealth building, short-term income, so on and so forth.
Yeah, so here we can see, so the original system for demoing, right, we did a 5% pullback entry and a 10%, right? And going back 14 years there, right, it only had 10 trades. And obviously, I'm sure everybody realizes that if we shorten up the entries and shorten up those profit targets, obviously we're going to get a lot more trading. So there you go. We went from 10 trades now to 44 trades. So
it's fantastic. And I see a couple of awesome questions coming in here. So let me try to
Good.
grab those as we're going here. So with a portfolio of 10 stocks, you can use this for each stock for entering and exiting a stock. Yeah, that's correct. That's right. It can be applied to all 10. That's right. Let's see. To swing trade, Paul, you were asking. You said to swing trade, you have to be able to cover overnight margin. To hold the MES overnight one contract, you need to have at least $3K in your account. Okay, listen. Maybe you weren't here. Okay. But this is very, very important. We actually discussed that whole thing when we were on my charts. That's built into the InvestSuite. There's literally a margin call feature, okay? And it's already there. Again, when we're planning out a trade, I can't not know that, because here's what would happen. I get into a position and I'm all hyped up because I'm like, this position is going very well. I want to double the position. Maybe I have the money to do that theoretically, but you're not accounting for margin. So then you've averaged, if you started here and then you bought again, you doubled your position here, you've averaged up to here, but you also doubled your margin. So if you fall back down, where is my margin call going to come into place? And you're absolutely right, although it depends on your broker. If you really want to go into depth about the conversation, Paul, you mentioned 3K, I think you said you have to have, but that's not necessarily true. It's more dependent on your broker. If you get the actual margin, I think it's closer to 2,200. I believe it's 2,100 and change. But, and this is very important, each broker handles it, not every single one of them, but some of them handle it differently. Now, the maintenance margin, your overnight margin, okay, that's going to be usually a much larger number than what your broker's day trading margin is. For example, you may, like if you use NinjaTrader brokerage or, kind of a boutique brokerage or even the bigger brokerages, what they'll a lot of times do is they'll come in and say, I'm going to give you day trading margin of $500, which is almost nothing. Like, that's almost nothing. But here's what they're not telling you. Not that they're intentionally not telling you, they just don't have the time to, right? So I'm here and this is what we do in PFA. We try to educate people. So if that happens, that's cool, right? So if I have a $10,000 account, then theoretically, yeah, I can day trade for sure because I only have to have a margin of 500 per contract. So I could even trade, 10 contracts and I'm only at a $5,000 margin, right? So I still have a $5,000 cushion there. Oh, no. If you go into an overnight and or maintenance margin, that is no longer controlled only by your broker. That's now controlled by the exchange in addition to your broker. So the exchange comes in and says, hey, if you're going to allow them to hold a position on our exchange overnight, you're going to put this much margin on them, which goes, okay, from about 500, not with all brokers again, but some brokers, your direct access, common, what a lot of you are probably used to. So let's use the hypothetical of $500. It just went from 500 to approximately 2,200, but let's say 25. I always conservative. So you just went from $500 margin to $2,500 margin just like that when you held that position overnight. So what just happened? You went from $5,000 in margin, multiply that number, okay? So it's exponential. You would have immediately hit a margin call. Immediately. You would have been taken out of that position. Your broker would have closed your position. Then they would have called you and said, hey, don't let that happen again, right? Something like that. But remember, the InvestSuite has all of that built in. It's going to warn you about it before you ever even place a trade or investment or anything like that. It has this huge, red label on the chart. I can show you, but it's a big warning. It says, warning, margin call. And not only does it do that, but it computes per contract, and it also includes the add-on contracts. So there we go with the cost averaging, okay? If I started with one contract, but then later added another one, I don't have one contract's margin, I have 2 contracts of margin. If I add 10 contracts, I have 12 contracts of margin. So it computes all of that, and it includes it in the margin call. Okay, very good. I love that you mentioned that, and again, that goes to show your level of knowledge. Very impressive. I appreciate that, Paul.
We have the correct settings pulled up here, Will. All right, I think this is your
there you go.
margin requirement per contract.
Yep, that's what I had defaulted in there, and exactly. So remember, it's not 2,500. I would very strongly encourage you all, if you're trading futures market, any market, go to the direct, like for example, the micro S&P or the S&P, go to the CME's website. It's going to give you the actual margin. It's called maintenance margin, okay? So you're going to want to look for that maintenance margin to see what that is. But on top of that, and this is very important,
or you can go to your broker. Right?
Yeah, exactly. Your broker
to find at your broker site. You know, 100%. If you've ever gone through the CME's website.
Well, yeah. I mean, I actually have the link saved, so I'm there all the time, just making sure I'm updating the margin value. But so I can tell you, not to like say anything good or bad, but and it could have changed. But from my experience, Interactive Brokers is a good example. They will take the exchange margin and actually increase that. So you're going from, like, on the micro S&P from, let's say, $2,200, they may make it 25 or 3,000 even. So you really want to get the margin, and then make sure that you talk with your broker to say, hey, I know what the maintenance margin is, but are you guys putting anything on top of that, right? And if you don't know the answer to that question and you're trading in the futures market, I hope that I've helped you today, because that one thing alone could wipe out an account very fast. So something to take note of. I don't know. Maybe it helps, maybe it doesn't. But like I say, all this is food for thought, and we just try to help folks along the way. Like I mean, hey, I appreciate Zach's helped me, and I try to help them, and it's just that community style thing, right? Let me see if we have any more questions. Oh, Bob, yes, thanks. Well, that's impressive there on the results he's talking about. Can we get that 2% Blackbird with the purchase? Yeah, so if that's something important to you, like I'm sure, well, you know what? Let's ask Zach. He's the man right there. Let's see if Zach's willing to provide that for me.
Question, 2% with Blackbird.
He's just, I think, asking about the template. Would you be willing to give me the template, I think?
Oh, yeah. Yes. Yeah, I will email Will both the BloodHound file and the Blackbird file here. So actually, yeah, I haven't emailed these to you yet, Will, but I'll do that as soon as we're done here, as soon as we wrap up. And yeah, since I included the 2%, I'll leave it in there.
Leave it in there, man. Yeah, that's great, because we got to show them the
pull it out. Yeah, there, and I will also email this as well. So
perfect. And yeah, I'll be happy to just send those on to you guys. Absolutely no problem. Thanks a lot, Joel. Appreciate you as well. Appreciate the kind words very much. Paul, yeah, thank you so much. You're very welcome. Yeah, and thank you very much for the kind remarks. Very good. He's also posting in a link there for the margins, and that's, now remember, this is specific, the one that you're posting there, which I appreciate very much, is specific to NinjaTrader brokerage, right? So that's their margin pricing. If you're using Interactive Brokers, if you're using Schwab, if you're, whomever, you would want to contact your broker to make sure that you get their specific margins as well, right? So very good. Yeah, thank you so much. They have others there as well. Okay, awesome. Listen, folks, we've been here for a while, so I want to say thank you so much. Zach, I want to say a resounding thank you so very much. It's always fun. We get to have that like just casual, fun banter, and I always enjoy it. I hope that the audience enjoys it as well. What I'll do really fast, let's give Zach a break. He's, yeah. I mean, at this point, we should be throwing dollar bills, right, or something?
Great. If you don't mind, well, I'll just show people real quick if they want to come in tomorrow and ask more questions about BloodHound. On our website, if you go to sharkindicators.com, and then go to the support menu. Pretty much everything you need is under the support menu here. And then I host a training workshop, so I would consider today kind of like a simplified version of the training workshop. And this is where it's another open forum, just like we had today, where there's no password to get in. Everybody's welcome to come in, and just ask your questions about BloodHound and Blackbird. So just go to the training workshops page. That'll take you here, and then here you can see the registration links for BloodHound, and then for the Blackbird workshop, those are on Fridays, and there's a registration link there. So these are two separate webinars here. So everybody's welcome to come in, if you got more questions about BloodHound and Blackbird. So I appreciate that, Will. Thanks.
Oh no, of course. I think that's great, and I would go so far, right? I want to encourage people to do that because you've all seen, like I said, look, at the end of the day, this is a lonely thing, okay? This is a lonely thing that we all do, trading, investing, etc. So having the community behind you, people like Zach that's willing to do it, it's amazing. So I strongly encourage you. Plus, you guys and gals would learn probably a ton just from seeing how their products work and being able to ask questions, things like that. We've already seen what Zach is, his level of knowledge today. So I think it would be a really wise choice to get in there.
All right.
Awesome. All right, folks, I'm going to take it back over. Here, let me see if I can do this real quick. And I'm going to, here we go. Let's see. All right, very good. So you all should have my charts back up.
Yep.
I'm going to head out in just a moment as well, but I wanted to conclude. I told you about a trade when we first started this. I told you I would kind of recap that. So I'm going to do that really fast, and then we will conclude the session. But if you have any questions at all, just let me know. I also put a link directly to the InvestSuite. Oh, folks, I'm so sorry. I'm gonna put in here. There we go. There's a coupon or discount code. So since we did the event there with Shark Indicators yesterday, we followed up with that. Well, we did during the event, but we want to follow up with that with a nice discount, right? So hopefully that helps. In my opinion, the product's already very inexpensive. At least it is right now as well. So you can get another 20% off for the next day, right? Okay, so back to this. If you have any questions, let me know. Just going to recap this trade. I told you that it was setting up. Too much going on today for me to get involved in any of this, okay? But what I mentioned this morning is that I did not want to be the buyer. I anticipated that we would, kind of fall back. I do want to be the buyer. I absolutely do. But I was just waiting for us to get outside of that range on the downside there, okay? And if you go back and review this recording, you'll hear me say, talking about the trade setup. So this was it. I didn't change anything. It's exactly as I put it on there. So this, the reason I'm concluding with this, number one, I told you that I would. Number two, is to help you see that we're trying to get this more holistic view of the financial markets, not just one thing collectively, right? So if we only focus on day trading or something like that, we're feeding into one thing, and that's fantastic. Hopefully it feeds us back, right? You never know. But we're missing out on so much. And I really, let me tell you how passionate about this I am, okay? My child, I'm not kidding you, my child, whom is definitely not of investing age, right? Well, these days, but I mean, he's very young. And so I do this same thing with my own child. My child came to me the other day and says, like, if you ask me, you say, how do you invest? This is what he says every time. I love it. He says, buy low and sell high. I'm like, I love it. And then on top of that, though, he comes to me the other day. He did research, okay? And he said, Dad, I want to buy an equity here. And he said, okay, I'm looking at a couple of the different ones and so on. And he gave me, there was like about 4. And he looked at them and he did this himself. I kid you not. I did this intentionally because I didn't want to persuade his decision. But I said to him, I said, what are you passionate about? And we walked through a few questions like that. What makes sense? Like we didn't really talk about fundamentals, not like balance sheets or anything. But just in general, I gave him some questions, made him think. He ended up buying Amazon. It was like last week. I'm not kidding you. He was up like about 5%, just like that. And it's amazing to sit there and see that a kid, right? A kid is likely outperforming, myself or something like that. It's amazing what people can accomplish if we focus on both. So all this is hypothetical, keep it that way. But what I'm doing is I'm saying, if I would have known personally back when I was a child, just like you could probably say the same thing, if we would have known to do that, we would be in very different positions today. But some of us didn't have the education. We didn't have the mentors, the people to look up to tell us how to invest and how to buy low and sell high. Although it's so basic, it's it doesn't seem that way.
Sounds like your son watches Jim Cramer and Mad Money.
Absolutely. Hey, man, look, when I way back, matter of fact, I will tell you, I bought his very first book. I read that book like nearly it was about 20 years ago. Absolutely. And so I remember, and maybe this was in his second one or something, but I remember questioning, he says in the book, something, I'm not paraphrasing here, but something to the extent of, if you don't know who I am, then there's something wrong, right? And when I read that, I was like, golly, man, look at the ego on this guy. But over time, I realized it wasn't ego at all. He was simply, and again, I'm paraphrasing, I don't know what he was actually trying to say, but I don't think it was ego talking at all. I think he was saying, if you're in the investing world and paying attention, I'm the biggest name, one of the biggest names there is. So you have to know about, him, right? When you said that, I bet you everyone knew who it was. And so it made a lot more sense to me over time. But I started paying attention. I will tell you, I started paying attention. And 20 years later, folks, Zach and I are here doing a webinar with a tool called PFAInvestSuite, collectively with the Shark Indicators. We're doing this because it is an evolution from point A to point B. And that's how we arrived here. And I'm going to do my best to have my child arrive, at point B way more efficient and way sooner. And I haven't even arrived. I'm trying to get to point B, but I want, our children, I want them to be able to do it. So I think, focusing on stuff like this is paramount, right? So, but yeah, sorry to go on about it. You can probably tell my level of passion, and I love this stuff. So, but yeah, so I'll conclude with that. Trading versus investing, we do it all. This trade right here was to break out, get outside of that range. Remember, we try to think outside the box, not inside of it. This is context. I don't want to touch this with a 10-foot pole. We're actually trading pretty much where we, started pre-market, okay? So all we've done is, danced around in this range-bound area, and this just tells me that I don't want to be involved in this. So this setup here occurred to get us out. That's great. I will sit back and be patient and allow this thing to put in a little bit more clarity. There's nothing requiring me to take part in the market, so therefore I like to practice patience. All right. Oh, thanks. Thanks, Ed. I appreciate that. Yeah, can we get the recording? He said I got in pretty late to the call this AM. Yep, absolutely. What I'm going to do, it does take a moment. We got to render it and all that fun. It's pretty fast. But we'll get the recording out, and I'll post it on YouTube for you guys and gals, so you'll be able to review and everything like that. If you have any further questions, we've already mentioned Zach and the team there, always happy to support you all from their end. We are very happy to support you all from our end. If there's a team effort, Zach and I, as you can see, we have a wonderful relationship. We will work together to ensure the success of our products, and so not the financial success, but the use of our products, okay? We are here for you. I want to say again, thank you all for attending. I really appreciate it. Ed, shoot me a direct email and I'll take care of you. You said you didn't get a link. It just depends on when you got on the newsletter and all that stuff. But I'll take care of you and we'll make sure of all that. Okay, God bless you all. Thank you so much for attending today. I hope you have a fantastic rest of yours and look forward to seeing you in future live streams and all of our in the community hopefully and all of the above. Take care. Bye-bye.
Thanks, Bill. Good hanging out with you.
All right.
All right.
Bye, everyone.